Hi there, Roger Connect, President of Universal Accounting Center. I'm going to take a few minutes here and actually go over a number of things related to billing for accounting services, what the more common or traditional ways are to charge for those, and perhaps what is the preferred method for you to get paid what you're worth as you're providing accounting, bookkeeping, and tax services. So as I go through this, I would encourage you to take out a pen and paper. I'm sure you're going to have some thoughts, perhaps even some ahas, and I think you'll appreciate a few of these insights as we go through these various methods. So let me go ahead and start with perhaps the most obvious of the four that are listed here, which is the hourly. The hourly is the most common. It's very traditional to obviously refer to billable hours in the accounting profession, and so we definitely want to start there. I will tell you to begin with, though, this is not the preferred method, nor is it the right method I feel to charge for your services today, but I do believe that this is essential to know to answer all these others. So we're going to go ahead and start with the most obvious and talk about hourly. So let's first of all give some ranges. I'm going to just say that for the majority of the discussion today, to keep it simple, we're going to start with the bookkeeping type services and just understand that when offering accounting services, they're going to be above and beyond preparing the financials, as well as the tax services, and I'll try and tie those in towards the end. But beginning with bookkeeping services, the range traditionally is $40 to $80 an hour for services. Now, the range does exist as an average, and when you're doing this, just understand that particularly in the United States and Canada, the more urban areas, the larger metropolitans such as, let's say, San Francisco or Toronto or New York, you're going to be on the higher end just because of the cost of living and so forth, and you'll see that $80+ an hour. But as an average, you're going to see this range very, very common. The $40 an hour is the lower end of the spectrum, and it is something that you can see in rural areas, smaller markets and so forth, but definitely nothing less than the $40 an hour. Anytime I run into a client that's charging less than the 40, I really give a great deal of pause and express concern, because I don't definitely feel you're being paid what you're worth, nor the services that you're providing. Now, the next thing that I'd like to explain with regards to the hourly is, with the reference to the hourly, understand that the hourly actually can be very easily determined by a simple formula. Look at it this way, and this is kind of a little tangent, I guess. Imagine if you had a client and they were offering you a position to go work for them full time. Well, one of the things that you'd have to recognize is that there's an hourly wage for your services, and those hourly wages that you'd be paid for your services are basically what you're willing to say, I'll work there if you keep me busy, if you provide a desk for me, a chair for me, if you're going to give me the supplies, if you're going to offer me maybe, let's say, health insurance and vacations, if you're going to maybe even give me some other benefits as well as pay the taxes. Well, with all that in mind, there is a difference, because you're now employed than if you're self-employed. So what you want to keep in mind is that the formula says that it's 2.5 times what you would be willing to do as an employee for that client. So if you're willing to work for, let's say, $20, $25, $30 an hour, then it's 2.5 times that you should be charging as an hourly rate for your time and services when you're working with them as a client. Now, that takes into effect the fact that your job is to keep yourself busy. Your job is to buy the computer, buy the desk. Your job is to stay current in your training so that you can be efficient at the work that you're doing. Your job is to pay the taxes that are associated with the work you're doing, provide for your own vacation and your benefits. So there's the rule of thumb. Now, I will tell you that a lot of people do get above this, but if you are at least doing this much, you're at least in an area that you can feel comfortable and confident that you're getting paid fairly. So that's one of the things that I think is very important. Now, as a range, I do want to point out with this 2.5 times percent, obviously the goal is to, one, either start earning more than that by charging it, or becoming more and more efficient, that as you do the work, you start getting this more easily because of how you're more proficient in the work that you're doing. And we're going to see that in a minute. Now, what I want to point out is this is the hourly side. Well, this is going to become quite important as we look at all these others, because we're going to reference back to this and just make sure that we're within the range offering bookkeeping services. Now, I said I was going to bring in or tie in accounting and tax services. So let's go ahead and just bring those in. Basically, you're looking at 100 to 150 traditionally for accounting services, and then you're looking at essentially 150 to 250 for more of the CPA type tax services and such. That's one of the things that I think you can definitely look to, aspire to, and do if you're not already. Now, in this range, one of the things that I want you to understand is, as we go through this, again, we're going to be focusing on the bookkeeping as a benchmark to begin with. Flat rate. That's the second most common way of charging for bookkeeping and accounting services. The hourly rate has its place. Generally speaking, I see that that's used when you're doing when you're doing cleanup work, when you're going back and taking on a project that's going to have an end. It's not exactly clear the scope, and so you're going to be paid hourly for that work. It's also appropriate to charge hourly when you're doing training. You're going to come in and train the staff for 2 hours and help them maybe do this or that, and in training them, they're now ready to maybe do that task. Well, that's great. How did you get paid? It's hourly for that. So let's talk about the flat rate. Flat rate basically is broken up into one of two types. It's either transaction based, or it's going to be based on what some people call a package or menu type system. When it's a package or menu system, this is where you're hearing the familiar phrases of ABC, gold, silver, platinum. It's where you're putting together packages with the intent of driving the majority of your clients towards this B option. The A option typically finds itself as being the more expensive. It's generally distinguished by having a lot more services or value add to it. In fact, it's for that reason that a lot of times people mistakenly refer to this type of packaging as value pricing, which it is not. But this is typically where you'll have that confusion, simply because in order to build the packages, you put a lot of value here in A, you put some of it in B, and then C. Some of the distinguishing things that you can do to help you come up with these packages. B is generally all the services that you're generally providing as you're doing the financials, you're maybe reconciling accounts, you're maybe doing payroll. Those are the types of things. C is where you're maybe doing work for a client on a less frequent basis, maybe quarterly, let's say, where this would have been maybe a month-to-month preparation of the financials and meeting with the client. The other thing that's related to this that I think is important is this is where you're setting aside time, maybe about 1 or 2 hours a month, to meet with the client on a regular basis, where this may be somebody that you're meeting with quarterly. The A type of person is looking for additional services. They're expecting you maybe to come into the office, maybe work on site 1 day a week, 1 day a month. Maybe they're having you be on call all the time if any questions are needed from the office. That's where this group is a little bit more demanding, and they're paying for that. Generally speaking, what you're going to find is the majority of your clients are going to sit right there in that middle package. In offering your services, it makes it a lot easier when you have these bundles to simply say, which are you interested in paying for and receiving from me? And it's kind of like a menu. I pick and choose. That's the benefit of this. Let's go to transactions for a minute, and then I'll tie this together. Transactions based is essentially saying, let's go through as a company and talk about everything that's going on in your business that's accounting related, because it's going to be my job to record all these transactions and prepare for you from them the financials. And so you're just going to go through, and I think this is kind of obvious. We actually do provide for our students and alumni a sheet that you use for questioning that allows you to really quickly go through this, but it's quite obvious in the sense that you're asking about those things that you're going to be recording as transactions. How many people do you have on payroll? How often do you do payroll? How many bank accounts do you have that you're going to be reconciling? How many credit cards do you have? I mean, you're just going through and trying to figure out, okay, what's everything I'm going to have to record and document so as to be able to prepare the financials. This right here, the transactions, normally what happens is once you get a count of all the transactions that are going on, you're going to consider them to be units, basically units of time that it's taking you to enter and record those transactions. Most people will charge 50 to $1.25, 50 cents to $1.25 per transaction to prepare that. And what they'll do is, in doing that, they're timesing it by the transactions, and then they add $100 or $200 for the time to meet with the client. So once you do this, you'll find that most of the clients are having traditionally right around 300 transactions. That's kind of an average. And so the 300 transactions that are being recorded, the things that you're doing to prepare the P&L, the balance sheet, the cash flow, all these things are coming together, and then you're just adding in the time that you're using to prepare for a meeting with the client on a monthly basis and then meet with them. And therefore, you come up with a range that generally will be about $500 to $800 for your preparation of the financials and meeting with them to deliver what it is you've prepared. Now, here's the beauty of this. Normally speaking, that $500 to $800 range is basically about 8 to 10 hours. Normally it's 8 hours of work each month. So you can definitely see that if you do the math, you'll see that if it were 10 hours divided into 500, you're getting $50 an hour, which is in that range up there. The other thing that you'll notice is most people will do down here a range where this is maybe about $750 or so, just to give you an idea. This right here will probably just be under $500 a month. A lot of people will do this around $300. And then over here, this is normally where you're getting $1,000 a month or more. Some will do $1,500, some will do $2,000. The point is you can come up with your packages quite easily when you go through this whole process. I can definitely tell you per firm, you have to come up with your own bundle. You have to come up with your own package and the fees associated with what that will cost your client. But these two ways are common and traditional. I'm hoping you're seeing here things that are familiar to you already because you're already doing one or more of these. Now, as for transactions or package, I would definitely suggest that you pick one or the other. It's not necessary that you're offering your clients either or. The other thing I would suggest is with flat rate, you're definitely doing yourself a huge favor moving from hourly to flat rate with your clients. This is another little tangent that I'd like to go on. When you're charging your clients hourly, I want you to always understand that in your client's mind, they're always looking at finding someone cheaper to do the work in-house than having you do it. That right there is something that they're always in the back of their mind considering, when will I have enough work that I can then in-house this operation? Well, you never want to be in competition with somebody else that's going to be a W-2 because the employer is not thinking correctly. They're assuming that that hourly wage is basically very expensive, when in reality, if you consider the burden that they're taking on when they employ someone with the taxes and the payroll and the benefits, that it is comparable, and they obviously are kind of missing that point. The second thing with hourly is I want you to imagine the client having two piles of bills that they're having to pay each month. When the client actually has your invoice, are they putting you in the pile with all the other invoices that each month are new, they're not known, when they haven't opened up the envelope, they don't know what the fee is going to be? Where on this side, they have recurring bills, they've got their rent, they've got their utilities, they've got things that every month always come, and perhaps they're even the same dollar amount. Well, which of the piles do you think they pay off first? Well, it's definitely the recurring one, and especially the ones that they already, before the month began, knew what it was going to cost. You want to be in the other pile. You want to be in the pile that the business owner is just paying it. So we want to move you from hourly to flat rate. But the other thing that affords itself as a flat rate is now you can charge before doing the work as opposed to after doing the work. Here, when you're charging hourly, you're saying, I'll do the work first, and when I'm finished, I'll meet with you, and then you can pay me. But here's the challenge. When you're charging hourly, the client, if they are, let's say, unable or not wanting to necessarily pay you, maybe it's a cash flow thing or whatever, all they have to do is avoid meeting with you and getting the work delivered, and they put off your being able to bill them for the time you've already worked. Where it's flat rate, you can actually charge them up front on the first or second or fifth of every month before doing the work, and that way you're actually paid before you even start. So there's a huge benefit moving from hourly to the transaction based or the package based, which is flat rate. Now, I will point out and stress a few things here. With regards to flat rate, I do want to emphasize the fact that this is something that you would set up with an engagement letter detailing the services that you're providing. That becomes your checklist, essentially your workflow that you're going to be doing each month for the clients. All of your C clients, you know what you're going to do. B clients, you know what you're going to do. A clients, you know what you're going to do. That's a beautiful part of this whole process too, is it does establish your workflow. Now, one thing I want to stress here before I go any further is with regards to hourly, understand that if you're employing a bookkeeper to do the work for your clients and you're paying your bookkeeper, let's say $20 an hour, what do you think you're charging your client for them doing the work that they're doing? You're paying them 20, you're timesing that and coming up with an amount that you're then invoicing the clients. Do you see how this is helpful here? The other thing I want to point out is with regards to flat rate, there's also a setup fee that you should be charging your clients for the work that you're doing. The setup fee should match the monthly fee that you've decided to offer your services for. So if your setup fee is for a B client, if they're $750 a month, what's your setup fee going to be? It's going to be obviously the $750 again. So here they're going to be paying 2 times 750 for that first month as you're going in to set up the books, become familiar with their chart of accounts, review their business and understand what is going on in that company. That's allowing you to, in that first month, get everything in order and set up as you should. Now, here's a word of advice as well. When you're setting up a client, and let's assume that they're wanting to haggle for your services, you don't want to be haggling your fee for your services. You don't want to haggle yourself to the point that in discounting this, all of a sudden now, 6 months, 12 months, 18 months down the line, you're still trying to get back to what you should have been paid all along. When you have a client that you're trying to maybe close today, get the engagement now, have them feel as if they got a good deal, what you discount is the setup fee. It's that one-time discount that you offer for being a joint member of a networking group or a family member or a referral. Because of that, you discount the setup fee, and then it's a one-off, and you still get every single month the fee that you were owed for the services you're providing. So just some tangents there that I'm hoping that you're catching. Let's talk about revenue-based. When you get a client that is outside the norm, or more importantly, transactions are too large, there's just too many to ask the business owner, the president of the company, hey, let me ask you, how many this do you have? How many checking accounts do you have? All of a sudden, it feels like you're nitpicking. And so what we want to do is revert from the smaller businesses in the packages here to a revenue-based model. Now, revenue-based can easily offer an ABC approach. Revenue-based is simply saying, look, because you're a company that has $1 million in revenue, $3 million in revenue, this is what I charge for my services. A rule of thumb is you just want to come up with a base amount per million that you're charging. So, for example, if you wanted to, you could say $1,000 per $1 million in revenue. Okay, so if they were 1.5 million in revenue as a company, then you're charging $1,500 a month for your services. That's a great way of doing this. The question is what's your rate per million? Some people will say it's $750, some will say that it's $1,250 per million. Well, if you just know that, and you know what their average last 3 months of revenue were, or their last 6 months average revenue was, you're able to then take your rate here, the 1,000 per million, or 750 per million, or 1,250 per million, and literally come up with a dollar amount that you'll be charging for your services. This is an easy way to have you with intent, with purpose, and be confident about your fees that you're charging. You don't want to be in a position where when I speak with some people and ask how they come up with their rates and their fees for services, they just say, I don't know, I just thought, or I guessed, or kind of, it was a gut feeling. I want you to understand there's a method to this. There's actually a very logical process that, when done correctly, gives you confidence in the numbers you're offering to your clients. Let me just go to value pricing, and then I'm going to try and wrap this all together. With value pricing, I want you to understand that this is based on a deliverable. It's intentional to say you're going to meet with the client and you're going to scope out a project, and you're going to say that we're going to work on something specific that's either going to save you certain amounts of dollars that you agree to, that this potentially could save you, or make you so many dollars that if we implement this, it's going to save you this much money. And what you're going to do is be paid for that project based on the value you're bringing to the whole situation. Your expertise is enabling you to actually help them achieve something very, very specific. And that's what we're trying to do, is based on the value they're receiving, not the work you're doing, get paid. So there's basically a few ways you can do this. One way is you can 2 times your hourly rate. So if you're taking this, basically, let's say you're charging $50 an hour, you're going to double that, and it's now $100 an hour. Okay, that's one way of doing it. It's not the preferred, but it is one way. The second is flat rate. You can basically say, look, because of the time it's going to take me each month to do the work, I'm going to do this for a specific dollar amount. It's a 5-month project. We're assuming that you're going to, in the process, save $5,000. Or excuse me, $50,000, so I'm going to be paid $5,000. So we're going to do $1,000 a month for the work. Okay. The other way, and this is by far the most preferred as a value-based service, is you want to charge 20 to 25% of the outcome, whether it be the savings or the revenue increase. That percent is based on either monthly, quarterly, or semi-annual numbers that you each agree to, and based on the work you're performing, it allows you to literally go out there and get paid what you're worth, because you're now a little bit more vested in the project, because you've already defined what's going to be deemed the outcome, and you're pricing according to that. You're working according to that, and that's what you're going to be able to do. These are the most 3 common ways of being paid based on the value price services that you're performing. Generally speaking, this is something that you can do that is either project-based in the sense that there's a defined deadline or end date, or it could be something that is perpetual, that you're going to take care of something, and based on that certain increase or savings for the next number of months, you're going to be paid that percent, let's say. So I want you to understand there's definitely a lot of details in all of these that we could speak to each individually if we wanted to talk one-on-one and go over what it is you're doing in your practice. But I want you to see there is a method to the madness, and I trust that if you're not already familiar with these, I'm hoping that you had an aha moment of saying, okay, this is starting to make a lot more sense. So let me just add a few more things here. I said at the beginning, this is all based upon bookkeeping services, just preparing the financials. Down here with value pricing, that's a little different. It's more project-based. But talking about revenue-based up, looking at bookkeeping services, I want you to understand that if you're choosing to also do accounting, where you're doing more the analytical review of the work, you're actually now showing trends, you're preparing ratios, you're maybe doing a dashboard, let's say you're doing benchmarking. All these accounting related services are ones that you should also be paid for. And generally speaking, you take whatever this dollar amount is, let's say 500 to 800. Let's assume that these clients here, the 750, the 1,000, the let's say $300 a month for your packages. What you would add for accounting work is you would add to that basically an additional $200 or $300 a month. That gives you the time to prepare to meet with the client, say about an hour of prep time and about an hour of time meeting with the client. Well, if you're doing an hour of prep time and an hour meeting with the client, and that's 2 hours presumably each month, and you're charging, let's say, $200 or $300, do you see you're making as an accountant the $100 or $150 an hour? You're already in that range. You're doing fine. The second thing I want to point out is taxes. Taxes is something that you can definitely bundle into this and throw into the pricing. The way it works is most tax returns for a business cost around $1,000 to $1,500, the preparation of them and so forth. So what we want to do is we want to take and actually help the client not have a lump sum that's owed every tax season. And we also want to lock them as a client so they're not maybe every year looking for someone else to do their taxes. So what we want to do is take that fee and we want to amortize it over the year. And so generally speaking, you're also going to add to this, if you're choosing to do taxes, $100 to $200 more a month, and therefore over the course of the year they're going to pay you for the taxes. Now if you did $100 a month, that's $1,200 in revenue. If you were typically on average doing taxes for your clients and it was around $1,200, you can see how this is coming in great for you. Most of the time, I can tell you, if you did 100, 150, you're going to come out actually ahead, which then justifies you're then doing tax planning with the client, which would then suggest that you're actually throughout the year meeting with them and doing tax planning. Now, I'm not going to talk about the strategies as to how to perform the tax planning here. This is a pricing discussion, but I'm hoping you can see that bookkeeping, accounting, and tax services are all encompassed in here, as well as the consultative services. Lastly, if you did choose to actually offer in there consulting services, which is different than value pricing, but actually going in as a consultant, I can definitely tell you that the consultative services generally run about $1,000 a month. Some will go a $750 to $1,000 a month above and beyond what you're doing for your bookkeeping, accounting, or tax services. Now, this is a whole nother discussion where you're actually maybe doing maybe a profit first, a value builder type approach with your clients, and you're doing more consultative type things. But definitely you can see how adding this then increases the average revenue per client that you're actually receiving above and beyond the bookkeeping, tax, and accounting work that you're doing. So those are some of the things you want to keep in mind. So we're talking full charge bookkeeping. Obviously, going to accounting and CPAs, we've got the range here of 40 to 80. We've got here the range of 100 to 150. And we've got tax obviously being this additional $100 to $200 a month for your services to do both the tax preparation and tax planning throughout the year. We've got, you're doing individual tax returns. The business tax returns is basically this $1,000 to $2,000 for the year that you're doing, that you're bundling back in right here. Right? You're bundling back into the monthlies. And we've talked about consulting and offering consultative services, which you're now doing above and beyond the bookkeeping that you're actually doing. This is where you're able to offer group coaching, where you're doing kind of a mastermind group with the business clients that you have, where the business owners come together and they're in a group setting, or individual, where you're meeting with your clients and consulting them one-on-one through a very specific coaching regimen. Now, I hope that this has been very insightful. I'm sure you're going to have some questions, perhaps even some comments. I'm looking forward to those. I hope this not only rang true, but more importantly, sounded familiar to you, just because this is what you're already doing. But I'm hoping this also gives you a lot more confidence in the numbers that you're offering as you're working with clients and providing the services that you do. Just understand, if it's about accounting, it is universal, and there's no better way to get paid what you're worth than to have the confidence and the competence to do the work professionally. Take care, understand, accounting success is universal, and we're here to help you out. Take care.